Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest, and that's going to be Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, and happy Friday, Landon.
Happy Friday. Thank you, Tom. Good to be here.
All right, so we're talking DraftKings, and just disclosure here, I like getting on these sites and betting against my teams. I usually do emotional hedges, but I'm looking at this stock, and that's kind of why I picked it. The stock's up over 210% so far this year. I mean, it's had a spectacular run. They're not even legal in every state, in some big states with big populations, but it seems like everybody's getting on board here with these betting companies.
Yeah, they are. I mean, this is actually the biggest NFL betting interest we've seen in several years. So this is a big season for them. And, we always see a spike, obviously, this time of year with college football playoffs and everything happening with NFL playoffs. So we're getting into the nitty-gritty, the really important part for sports betting. And you can see here the interest on NFL betting. You can see when the seasons happen, but you can more importantly see that this one is much larger than previous years. So obviously good for the company. And when we look at sort of the comparison of, them and their competition, DraftKings, FanDuel, Penn National, what we're seeing is that DraftKings and FanDuel, if you go back, look about a year ago, the far left part of the chart, we normalized all the web visits to the same scale for these guys, and they're all about the same about a year ago, about a 10% difference between the biggest and the smallest. And they've all had their seasonality, but FanDuel and DraftKings picked back up, whereas Penn National just did not. So we're seeing them fall pretty flat here. So I think they're sort of the avoid of the group right now. Pretty bearish data on Penn National, but FanDuel and DraftKings both picking up as expected, with FanDuel having the lead just a little bit. Solid numbers on happiness, nothing extraordinary. You're going to get some negative mentions when you talk about, betting and things like that, because you're going to lose half your bets. So they've got about 60% happy, which is not bad at all. But their mentions are up significantly on a year-over-year basis, up 17% on a 90-day moving average. When you zoom in a little bit, it's up 23% on a 30-day moving average. So we actually see that accelerating. So again, that's that NFL season being more interesting this year for whatever reason than previous years, helping them along. The downside, though, I would say, is there's a lot of competition. Yes, they're opening up new states. More and more states are coming on board. I think it's just a matter of time before we get to near 50. It's just an obvious moneymaker for states, and they're all going to figure that out eventually. But there's a lot of competition here, and it's weird to talk about margins because on a variable basis, the margins are 100%. It doesn't cost them anything besides servers to host these bets. But customer acquisition is very, very expensive for these companies. It's very difficult, and it's very expensive to make sure that you get good customers. You need somebody who's going to continue to bet season after season and give up that juice to the house. So the customer acquisition cost is very expensive, and there's a lot of competition fighting for those people, for those customers. So that's only driving that higher. And customers are pretty fickle. I mean, hypothetically, if they raise the juice from 110 to 115, everyone would leave. So you have to. It's a bit of a commodity what they're offering. They're trying to become unique as much as they can with individual player bets and things like that. But they all kind of they all go to the same level basically, and so it's a bit of a commodity, and it's difficult to get those customers on board at a low price. They're very expensive. So on the industry as a whole, we're starting to cool a little bit. We actually had a position on DraftKings that we initiated in June of 2022 at 1160 for our clients. We just exited that just over 36, I think just a week ago, 2 weeks ago, something like that. So we tripled up on that one. But overall on the sector, we're pulling our money out of this one. I think it's run its course as far as the stock goes, and it's getting a little too rich for our blood based on, again, the competition being so fierce.
Landon, the first 9 months of this year, their revenue grew 76% year over year. They've got a lot of good growth metrics, and betting on sports, betting on football and fantasy football, where they got their start, gets more and more popular. That said, they're currently in 25 of 50 states. That's good if you're looking at future growth, but it looks like this industry is a mess. In terms of 50 states have 50 regulations for them to get through. You talked about the investment they have to make to get customers in each state. And Landon, no California, no Texas, no Florida. That's 28% of the population isn't available to this company right now. How can that change, Landon?
It's just politics. They got to get in there and donate to the right people and get those votes, because it's an easy win for the states. You get a lot of revenue from it, and I think people in the states want it. Obviously, DraftKings and FanDuel want it, so it would be a win-win. But for whatever reason, it just takes a little while. If you rewind 5, 10, 20 years ago, it wasn't in 25 states, so it's going in the right direction. It just takes a little while. So I do think that when they do open up those big states, it's going to be a boost to the company, but it's also going to be it's just going to be more competition. I mean, once you get to the point where you've got California legalizing it, you're going to have California companies pop up, Texas companies popping up, Florida companies popping up that are going to challenge them, because they're not the only players in town. I mean, there's a lot of ways to launch a website and get these sports books going. So it's not difficult. It's just a matter of paying the fees and whatnot. But I think that there is upside, obviously, to the number of customers. The revenue is doing very well. It's a great model. Once you have somebody in, again, it's basically just free money as long as they keep betting. You can't beat the house. But it's a matter of competition. It's a matter of those customer acquisition costs that have us a little bit worried that maybe they're priced very fairly or maybe slightly at a premium right now.
Yeah, and Landon, when you look at the landscape and the competition in it that you keep on mentioning, now Penn Gaming's partnered with ESPN. I mean, is that maybe if you looked at a name in this sector that maybe they have the most opportunity because of the tie-in with the ESPN bet?
Yeah, obviously. I mean, I think that they tried with Barstool Sports. Now ESPN's going to get their take at it. That one is going to be tough. I don't know how the regulations are going to work out. How can they, will they be able to advertise in a way that only hits certain states that allow it? Because if you get in a situation where you're watching the game and there's a live line on at timeouts and it's got a QR code where you can click to bet, that's going to be very, very powerful. So I think that's the dream. I mean, that's kind of what Fubo was going after for a while there. I don't know how they're doing, but we've always been pretty bullish on their very ambitious goals in that space. But that's kind of, I think, the dream scenario for a sports book is to be tied in with the game itself, the display of the game, so that you've got live lines at timeouts and halftime and whatnot, and just click the bet, pull up your phone and boom, you're betting. That is a game changer. That's a winner if it ever happens. But I don't know how they do that with 25 out of 50 states.
I actually use the ESPN bet, and now when I'm watching a program on ESPN, they're giving us odds, over-unders during the commentary and stuff. So maybe those QR codes are right down, not too far away in the distant future there. All right, great stuff and great data as always, Landon. Have a great weekend.
Thanks, you too, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data. Kevin, you heard it there. I mean, spectacular run. They were in this one earlier. Now, parsing back some of their bets. Sorry for the pun, but how do you want to look at this from an example trade?
Tom, the question is, how does a company like Disney, which owns ESPN, get into sports betting and